Mr. Natrajan joining us now. Mr. Natrajan, thanks so much for being with us. It's been a tough quarter. Loan growth has moderated, and with the CV where it's at, coupled with the sluggishness in corporate, how long do you see things taking to turn around?
So, from whatever we can see and the efforts that we are putting in, and the people that we are adding in, especially in mortgages, home loan, and MSME, SME, I believe that our growth should look somewhat better than what it is currently in maybe 2 or 3 quarters later, because the efforts are going on now. As you know, the key focus of the bank is MSME, SME sector. We have very limited focus on salaried segment, and our major product is mortgages. Within that, about approximately 35–40% is home loans. Given the current level of economic activity, working capital cycles have got extended, so there is some stress. Corporate is not our focus. The entire corporate book is just about 12%, and I do think that as the balance sheet keeps growing, corporate would be 10 or sub 10. We just use corporate to have some kind of a, there are a lot of customers that have been with us for a long time and they are there. Other than that, we just use it for, a liquidity type of management. So I'm hoping that things should start picking up in about, it's a very large economy, so positive things should happen. I think in about 2–3 quarters, we should see some improvement.
So I'm going to pick it from where you just left and take a leaf from your answer. Your focus is the MSME and SME segment. Now, some would argue that given what is happening to the economy, that is the real stress point, right? Because the big companies are suffering. MSE, SME traditionally are very niche players. They don't have great efficiency. The cost of borrowing is higher, and the economic slowdown will always hit them the hard. So, if I have to put 2 and 2 together, if you're focusing on that segment where we know the problem is, can I safely say that the revival is unlikely to happen in your asset quality at least for 2–3 quarters?
Let me kind of give you some color on that. The SMEs and MSME that we are focusing, the average ticket size is 30–40 lakh kind of average loan ticket size, and we do secured loan business. The economic activity that is currently there, I think, is impacting all. I won't say that especially it is impacting SME. In fact, I would like to argue that since their borrowings are limited and they are not, except the ones that are over leveraged, they are able to manage their profitability a lot better. And although sales are somewhat down for sure, the second point is that there are still lots of opportunities in small ticket home loans, again to the SME segment. Where the challenges are somewhat high, I would say, is in the commercial vehicle. That may take a little bit more time to revive. And if you see our NPAs, a lot of NPAs are coming from the commercial vehicle segment, which may take a while. We have been dealing with SME, MSME segment over the cycle. I mean, for the last 11 years, that's the only segment that we have been dealing with. We've gone through, they've gone through ups and downs. They've had to deal with some of the big changes that happened in the last 3–4 years. And the ones that are running well, efficiently, are continuing to flourish. In fact, I would argue that a lot of the financiers find some of these customers still very, very attractive.
Deposit growth has also come down to 8%. Is that a cause for concern, Mr. Natrajan?
Not at all. I think you should read it more in detail. Customer deposits have grown by 16%. Customer term deposits have grown by 21%. Plus, we have got 725 crores of refinance from NHB and SIDBI. What we are doing is, we are heavily focusing on small ticket retail deposits to completely change the profile of the bank's funding. So if you look at our top 20 depositors, consistently we have brought it down. It is right now below 9%. We are hoping that we will bring it down to below 5% in maybe 2–2.5 years time. So the focus is on retail deposits to replace the large ticket deposits or interbank deposits, because we want to create a really good profile of our deposit. That's basically what is happening. So I'm quite happy with the deposit growth.
To understand as well about the slippages, because as I see in the quarter, they've seen a bit of an uptake. Given there is still an issue with packaging company as well as the general
Yes.
weak economic environment as well. Tell me, what kind of guidance can you give for your slippages and overall credit cost?
So I will continue to maintain the same kind of guidance that I've been giving for the last many quarters. If you look at this quarter slippage, it's about 200 crores. Out of that, if you remove one corporate loan, which is at 40 crore, and I'll talk about it in a minute, the balance slippage is about 160 crore. If you look at our recoveries, take out the RSIL sale, it is 94 crore. I would like to say that our recoveries are probably one of the best in the industry. It is about 58-59% running at that kind of average. That is because we deal with small ticket customers. I said, average ticket size of 30-40 lakhs. We have their commercial or residential property as collateral. Therefore, we are able to kind of get the recoveries far better. This quarter, we sold about 130 loans to RSIL, again small ticket loans. And we realized about 38 crores, which was more than what our net NPA was in the book, which means that not only we have made adequate provision, the external entity also sees that portfolio as something that they can recover. The guidance that I have is that I do see similar slippages in the retail and commercial vehicle portfolio in the coming quarters. And I do think that recovery momentum should either remain the same or maybe increase. On the corporate loan, in India, what happens is, once in a while we have some issue or the other. It could be related to some event, it could be related to some regulatory change, whatever may be. And then you find some large customer coming into stress. This customer has been with us for the last 9 years. Even now they are paying some money to service their interest, but not enough to keep it as a standard account. That's the reason we had this NPA. At any point in time, in our book, 2-3 corporate loans remain in stress, and we keep working with the customer to see how best we can stabilize the account.
Thanks for joining us then, Mr. Natrajan, on those numbers this time around and for highlighting, of course, the parts where you feel growth is intact.